Hello. Today I want to show you one of the trade I placed on Bitcoin's USDC. That's the pair. And I traded this using TradeStation, as you can see here. So before I joined I placed the order, I did not know where the market would go. Now looking at the chart, I realized that the price was somewhere around here. So I marked my zone like this first red line, which I'm going to turn red, yes. And then that upper line, I'm going to turn it green. Those were my boundaries. Okay, I'm going to put it blue. So these are my boundaries. And the logic, the plan I'm making before I enter the trade is as soon as the price, so this is my range, and this big box in the middle it's my boundary. So this is the limit. I noticed that the price was somewhere in this range. I was not sure if the market will go up or the market will go down. So I put this zone as a marker for me. And my thinking going into this trade was if the price goes up, if the price crosses above this, then I'm going to be trading down. So as you can see, the price is sitting now in the 30 range, 30,124 and some cents. So I'm expecting, and I marked my zone. Those little dots are my profit targets. And down below, they should be red. All here, it's red. So those are my target points, target level. For me, if the price goes below this lower boundary of this box, I'm here to sell. If the price goes above, I am in the trade to buy, and I'm going to stop at the upper limit, and here I'm going to stop at the bottom limit. This is all I cared about. This I'm going to remove. This doesn't interest me, and I'm going to add an additional target because those are crypto. I mean, this is crypto and it can move very fast. So I'm just going to add some additional zones. So I'm just trying to make sure as I mark those zone, I'm trying to see where the weak touch. And here I'm not marking because this is an imbalance zone where the price is very likely to go through. But I've marked everything besides that. I'm going to move this a little bit down. So just make sure, I mean, I am making sure that the wicks of the candles can touch each other. Just making sure the wicks touch. So here, and I'm on the 1 hour. This is my higher time frame. Now I'm going to go down to the 15 minutes to see if this hold. The goal for me using the 1 hour is just to mark my boundaries. Yes, I've gone a little bit down, so I'm going to move this here. So this is the limit I'm setting for myself, knowing that this is an imbalance. I can even move my sell profit target to the end of this high of this imbalance or even go down. But my goal is really to stay in this range, like here. This will be my last profit target. So here's the logic. If the price comes back here, it's going to retest the zones. No matter the direction the price takes after that, I'm going to be in the trade to buy or to sell, depending on where the market is going. My goal here again is not to predict what the market is going to go. So I'm not going into market thinking that no, the price is going to go up or the price is going to go down. I don't know that. I can predict. So I'm just here waiting for the price to do its things, and I'll go in to react accordingly. So now we're going to replay this, and I'm going to go to the 1 minute, and I'm going to monitor this play on the 1 minute time frame. Going to zoom it a little bit. Okay, so here we have the prices already here. What I'm waiting is for the price to come back into this box and then react up or down. Okay. And usually what I'm making this thinking is because usually the price will do both. The price is not only going to go up or down, it keeps going up and down. And I mark my zone accordingly, making sure that at least 2 weeks, candle wicks can touch. at least two. And let's see how it went. Let's play it. So I'm going to play it a little slower, like one. Okay. Let's see. So the price is going, see? It's coming down. I'm waiting for the price to get to this box. Okay, I'm going to play it a little faster. Okay? So the price is going up. I'm not placing any trade. I'm just waiting. I'm just looking. See here? The price touched that zone. Some people could just place the trade here, but this is not my goal. I want the price to come back in the box and then shoot back up or down. That's when I'm going to be comfortable taking the trade. So it goes test the zone, shoots down, goes back up. Then I'm going to enter here. And you see when I'm entering here, as soon as the price returns, this is my target, my first target is hit. So when my first target is hit, according to what my trading plan is, I can decide to take some percentage of my profit and let the other price go. But I can also decide, okay, I don't have much time, especially if I'm at work. I'm just going to take my profit here and go. I don't have time to stay on. But if I have much time, if I have many hours to go, then I can, see how the plays go. Okay. How the plays go. Okay. Let's see. Goes up, comes back down. And by the way, when I'm entering here at this blue line, my stop is really down. I have a very tight stop. So my stop market will be right here, right below, in case it doesn't play out. So as soon as the price doesn't touch my stop, I'm just going to let it play. But then taking my profits as I go along. I also want to draw your attention to this zone. You see, my first profit target was right here, the first green dot. But then my second profit target was a little higher. Why? Because you see here only are red candles. This is called imbalances because the market did not give equal opportunity to buyers and sellers. We see that here there were only sellers, people that sell or selling a position or entering a position to sell. All of them were here. And knowing that when you have an understanding of the price, the market structure and the order flow, knowing that this is an imbalance because there were no buyer in this range, I know that the market is going to correct itself and making sure that we can go back up on this level. That's why I'm placing my target here and see how it perfectly touches the zone before it comes back. So this is very important to know. Let's go. So it goes down, it comes down. And here I'm taking my profit target too. And I have a profit target until up there. And this is also depending on how you want to go about this play. It could be like you just take all your profit, as I said before. I'm busy. I don't have time to stay longer. I'm going to take my positions and go. Other people can say, okay, after profit target 1, I'm going to take 10% of my position. Some people will take 50%, 70%, or 90%. And someone will say, okay, as soon as it hit profit target 2, I'm out of this trade. I'm no longer there. Some people will say, this is just a trade for profit target 1. And when it hits profit target 1, I am out. And when the price retraces and retests that zone, I'm going back in and taking that to profit target 2 and then taking my whole profit out. It really only depends on you, on your profit target, on your price action, and also on your goal, your trading goal for this particular placement. So let's see. Let's go. Comes down. So it doesn't quite do as much. See, it keeps in that range. Doesn't. Now, okay. Price goes back to hit profit target 2 again and moves up and hit here. You see it hits profit target 2. Now, another way of playing this is to, once the price gets to profit target 3, if I'm not in this position, right? If I'm not here, and I'm going to put a different color, I can move my stop loss to here. I move my stop loss here so that if the price continues to go up, I can secure the early profit that I'd made. See? Okay, so I'm moving my profit target there, but I'm not quite comfortable to move that because I expect the price to come back down. No. Okay, I can leave it there. And when the price goes back here, someone else can enter the trade and take it back and take it to the other side. And sometimes since crypto trades 24/7, there's actually no no, there's always a crypto market going on somewhere. It's not like a stock where you have a trading hour and non-trading hours, have post-trading or pre-market and post-markets. Crypto is not that way. Crypto goes on for forever. So you just decide when you want to be in the market and when you don't want to be there. And personally, I don't like to be in the market. I don't like to be in the market when I can't watch. So you see, it's going up. And so here is a good thing to note. The price did not reach my next profit target and it turned around. Here, as soon as I would have noticed that the price is turning around, I would have taken my profit. I would have exited the trade, or else the price would have come back, kicked me out, and you know, and continued its play, and then I would have lost all my profit. Okay, so let's see how it went. So, assuming that I'm just here, I hit my target. See, it goes back up, shoots back up. That's why it's really important not to move. Sometimes, moving, trailing your stop could be helpful, but sometimes also can be detrimental because at any point in time, the market could go. The market could reverse and continue its way. Now you see, this is a very important zone because the price comes back and rejects from here. When the price rejects here, there are sellers here. And you want to be careful. Okay, let's just let it play. So it does its things, and it goes on for 4 p.m. and 4:30 p.m. comes back down, goes back up. See those big jumps, and this is crypto. Crypto BTC especially moves a ton. This is a very fast stock, so you have to be very careful when you're trading because you can go from 0 to 1,000, and you can go from 1,000 to 0 in no time. So be very careful when you're trading crypto, especially BTC. BTC is very, very fast. So yeah, the price has been doing that. I'm going to move it a little faster so that we can get through this quickly. Yeah. So this is the movement it's doing. You see, the price, the stock never crossed this box. But it could cross it. It can cross it at any time during the market. So it's just keeps going. So you can just play it in and out, in and out, in and out, just respecting the zone. And as soon as you see a change of character, let's say a movement from up and down, and you're there. Okay. And just notice the imbalances. The imbalances also is a good indication that of what the price action could be. So just make sure you're aware of that. See, BTC is a very, very volatile security. Crypto in general, but especially BTC, which someone considered the king of crypto. See, the price hit my target. My overall target for the day was this blue line. The price hits it. My logic in this trade was like, okay, as soon as the price will hit that, I'll be out. I will have probably been out earlier because it hits first here at this at the I think it was 2 p.m., 10 p.m. I mean, and it hit it back again the next day at 3 p.m. So you need to be careful when you're doing that. You need to set your goals and just follow through. So now we're just going to see what the price is doing. And a great way to practice your theory or your trading plan is just to have this replay tool. I think TradeStation is a great tool to help you improve your trading. Well, at least for me, I use it every day. And when I'm not working, I spend my time on TradingView. See, look how it moves. Just mark the zones. You see, it's beautiful to see how my zones are marked so that those are places where the price will reject or retest. So it's very important to know your stock and to mark your zones so that You're not going to be stopped out. See, now the price is in the box. Yes, price is there. Does its thing, trying to consolidate. You see, the price has this series of big jumps and then consolidation. Like it makes some big moves and then rest a little bit and then makes another big move, then rest a little bit. This is how BTC works. So it tests that, goes up, and then it's probably going to come back. But you don't know. You're not here to predict. You're just here to react. So if it does this, I do this. If the play goes this way, I'm going to react this way. And you also want to make your to save and secure your profit as you go along. So this was a play of BTC. Yeah. See, it went back to test that extreme target. Yeah, I would have been out. I would have been out a long time ago. Okay, so just practice your trade. You can test, any stock. You can try that with any stock. This is Nvidia. This is JP Morgan. You can do that with the banks too. And this is a great tool. You can remove all drawings and just look at the stock the way it is and decide whether or not you want to place a trade or, just play with that. This is Now, which is also a tech stock. Yeah. So just practice. I think TradeStation is a wonderful tool that you can use for your day-to-day practice and testing and retesting of your plan. So feel free to use it as you wish. So thank you for watching. If you liked the video, give it a thumbs up and also don't forget to subscribe. Thank you.